Hey guys, it's Chris Wong. For this video, I'd like to talk about using grade 11 or grade 12 accounting concepts to help develop a mindset to build wealth. So as a disclaimer, I'm not a financial advisor. I'm just a guy who's interested in building a portfolio. So one of the concepts I use from high school accounting is the balance sheet that they taught in class. So the one thing they kept talking about was assets equals liabilities plus owner's equity. So whenever your asset goes up, either your liability or your equity goes up. So I may not apply all the proper accounting concepts in this scenario, but I like to use this general thought for myself in order to help build wealth, to help develop the mindset. So for example, when you buy a house, so most people think you're trying to build equity by buying a house. But the average person who buys a house is not going to buy a house at full price. They're going to actually take a mortgage in order to get the house. So when you get a mortgage, you have a liability because you owe the bank money, but you also have an asset. So the equation assets equals liabilities plus owner's equity is balanced because your asset went up because now you got a house, but your liability went up because now you have a mortgage. So another example would be if you're purchasing a car. Most people finance their cars and they think they have an asset, but you actually have a depreciating asset because cars lose value over time. But if you're also financing, you also have a liability because you owe the car company or the bank money every single 2 weeks or every month. So let's say for investing. So I don't know the proper accounting equation for purchasing stocks. Well, let's just say in this scenario, when you purchase $1,000 of stocks from your cash, that means the cash that's in your assets goes down and the stock value, either in your assets or in your equity side, goes up. So that means the assets equals liabilities plus owner's equity, the equation is balanced. I remember watching YouTubers and they would talk about you either have an asset or you have a liability. And I just recently thought, if you just borrow money from the bank, would you also have an asset and you also have a liability? Because when you borrow money from the bank, the cash is going to your bank account so that you will have an asset, but then you also have a liability because you owe the bank the money you just borrowed. So that balances out the equation. Asset equals liabilities plus owner's equity. I hope this is good information that will help you think about assets and liabilities and whether you owe people money or the money is completely yours. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.